Most people think you need 50K or 100K to start in real estate. Short-term lending flips that assumption. You can start with as little as $1,000 to $5,000 and earn returns that beat any savings account, CD, or stock dividend. Here's the concept. Creative real estate deals, wholesaling, double closes, subject to acquisitions, often need short-term capital. A wholesaler has a deal under contract but needs $3,000 for an earnest money deposit. A sub-2 investor needs $5,000 to bring a seller's mortgage current. A flipper needs $2,000 for a deposit on a double, close that settles in 14 days. You lend that money for 30 to 60 days. When the deal closes, you get your principal back plus a fee. Typical returns: lend $3,000, get back $3,500 to $4,000. That is a $500 to $1,000 return in 30 days. Annualized, those numbers are extraordinary, but do not think of it that way. Think deal by deal. This works because speed matters more than cost in creative deals. A wholesaler who needs $3,000 in earnest money by Friday does not have time to go to a bank. They do not qualify for a traditional loan on a property they are assigning anyway. They need someone who can wire money today and trust the process. That someone is you. The types of short-term loans you will make fall into three categories. First, earnest money deposits, EMDs. You fund the deposit on a wholesale contract. Lowest risk because the money sits in escrow with a title company. If the deal falls through, the deposit usually comes back to you. Second, gap funding on double closes. The wholesaler buys from the seller and sells to the end buyer on the same day, or within a few days. You fund the gap between purchase and resale. Third, transactional funding on creative acquisitions. An investor needs short-term capital to close a sub-2 deal, bring a loan current, or cover closing costs. Each type has a different risk profile and return. EMD lending is the safest starting point. You will earn less per deal, but your capital is protected by the escrow arrangement. Gap funding pays more, but ties your money up for a few days to a few weeks. Transactional funding on creative deals pays the most but requires you to understand the underlying deal structure. Start with EMD lending. Get comfortable with the process. Then graduate to gap funding as your capital and confidence grow.